Hello everyone and welcome to our final global market highlight sessions for 2025. I'm Molly Dai and I'm delighted to have you with us as we review the latest market developments and share AIA perspective. Let's begin with a look at recent market performance as of November 21st. So in equity markets, global equity markets has pulled back this month. The MSCI World Index is down 3.3% month to date, and the S&P 500 has retreated 3.4% as of November 21st. And also Asia ex Japan saw a sharp decline, dropping 5.3%. This reflects investors reassessing the sustainability of AI-driven gains, with concern about heavy capital expenditure by hyperscalers and the lack of immediate return from the major AI investments. At the same time, sentiment was further pressured by uncertainty around the timing and extent of the Fed rate cuts, leading to the profit taking and increased cautious. So especially this can be seen in tech and a broader equity market. But after or since November 21st, the stock market has rebounded sharply, driven by strong tech earnings, led by Nvidia 2% year-on-year revenue surge and Alphabet's AI-fueled outperformance, along with renewed optimism over December Fed rate cuts and robust fund inflow following a resilient the third quarter earnings season. So look at the bond markets. The Federal Reserve cut its benchmark rates by 25 basis points to 3.75 to 4% in October. So citing a softening job markets and emerging downside risks. However, officials signal that further cuts are not guaranteed, emphasizing a cautious approach amid mixed signals. So despite the rate cuts, fixed income markets posted negative returns. If you look at the chart, you will see the FTSE World Government Bond Index fell. Bloomberg US Corporate Index was flat. Hawkish Fed guidance and uncertainty over the future policy moon pushed yields higher and weigh on bond prices. So now let's shift to the macroeconomic backdrop. The October government's shutdown actually delayed the key data release, but September CPI came in at 3% year-on-year, still above the Fed's 2% targets. Inflation remained a risk in focus, making it harder for the Fed to assess the outlook and contributing to their cautious stance on rate cuts. And on the labor front, so September non-farm payroll surprised to the upside at 119,000 versus 53,000 expected, while the unemployment rate edged up slightly to 4.4%. However, ongoing data delay make it difficult to track job market trends in real time. So looking ahead, the next FOMC, the Fed's rate decisions is scheduled for December 9 to 10. Markets will be watching closely for any signals on future policy waves. So here is how AIA Investment Insights on the landscape now. Look at global equity market. We're moderate overweight. We maintain a constructive stance, especially on U.S. tech, supported by strong earnings and robust semiconductor demand. Fed easing provides a positive catalyst and downside support, and we're keeping eyes on risk like too much money chasing AI trends and companies taking on more debt to invest in new technology. Look at Asia ex Japan equities. So Asia markets outside Japan are showing steady growth, with Korea and Taiwan's tech sectors leading the way. Prices are rising faster than in developed markets, helped by supportive policy in China. Still, we are cautious because some companies are not making as much money as expected, and some stocks looks expensive. That's why we're neutral on Asia ex Japan equity markets. In fixed income market, we are less lean on bonds right now because high inflation is keeping long-term interest rates up, and we expect the gap between short-term and long-term rates to widen. US investment grade bonds offer decent return without too much risk, but we are underweight riskier high-yield bonds for now. In the cash, we're underweight because we prefer risk assets over cash, given the constructive outlook for equity and tech. So let's take a moment to highlight AIA investment proposition and stewardship, which is at the heart of our approach. We work with top investment experts from around the world and keep close eyes on how your money is managed. Our goal is to make sure every decision helps you build lasting value and reach your financial goal. We don't just think about the next few months, we plan for the longer term. That's how we build our reputation, by focusing on steady growth and helping clients stay resilient throughout all kinds of market up and downs. Our team includes hundreds of experienced professionals who know the ins and outs of the global investing. By tapping into their knowledge and working with leading asset managers, we aim to deliver the best possible results for you. This focus on careful management, long-term planning, and worldwide expertise is what makes AIA unique and helps our clients grow their wealth over time. So following are the disclaimers. This presentation is for information purpose only and do not constitute investment advice. Please consult your financial advisors before making any investment decisions. As we wrap up, I want to highlight that this is our last session for this year. Thank you for your support throughout 2025. Stay invested, stay diversified, and keep your eyes on long-term goals. We look forward to seeing you again next year. Have a wonderful holiday season. Bye!